All right, everyone. Thank you so much for doing this webinar. This is our weekly Precision Markets office hours phone call. We host these every Tuesday at 12 p.m. PST so that we can be able to have a visual format to be able to answer any questions that you have regarding trading. So for our first time people who are just now joining the office hours, the format is we will have you ask questions within the chat. When you ask questions, we'll answer questions in the order that the questions are received. You can feel free to come off mute when it's your time for your questions, but we just ask that everybody be mindful of other people when it's their time to ask questions. We got our Precision Markets coaches, King Nathan himself and myself, and we also have our student lead Peachy as well, who's in the chat, who will be able to answer any questions. So with that, I'm going to turn it over to y'all joining and asking questions within the chat, and we'll go ahead and begin. I'm going to give 1 second to wait for Nathan to catch on. Oh, we got inflow too. We got Marco. Okay, cool. So we got both of our student leads in, and we also have our Precision Markets coach, Nathan. And so first, oh, you there?
Yeah, what's happening? Can you hear me all right?
Yeah. And all the people that are first time for joining the office hours, can you just let us know in the chat? I know we got some people who just joined and probably didn't hear me say it before. So we're trying to just get an idea of everybody that's their first time in the chat. But while we do that, we'll go ahead and share the first question, which is what was kind of the bias from a higher time frame perspective. So let me go ahead and share my chart, and I will start with NASDAQ. Let me know when y'all can see my chart.
Yeah, we can see.
Perfect. All right, so I erased everything. Nice clean chart. Let's go ahead and hop into our 4 hour. So the key for our strategy is that we always take a 4 hour or higher time frame influence into making all of our decisions on what we do trading wise. And so in order for us to do that, I always start by looking at the 4 hour time frame. And sometimes I'll go a little bit higher. And in this case, I will. So let's look at the 4 hour on NASDAQ. So pretty much the first two things I look at on the 4 hour is I start looking at market structure first. So higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then we had this impulsive break to the high side, and we got this higher high. So from a market structure perspective, it has made a chalk, and there's a possibility that price could do one of two things. Price could continue to go from here and decide, okay, it's going to go up and go and take out that high, meaning that the high would be weak, or price could decide that it wants to eventually go down and take out this low, and the low would be weak. Right now, where am I betting my money? From a market structure perspective, and looking at just what we have available, we have a demand zone that was right here from a 4 hour perspective. We also had we have an extreme demand zone that's further down. So I'm gonna pull this and put this down here. And so right now, it looks like the low would be a strong low, and we have a weak high, it looks like. But right now, price is kind of hovering, and all this really could be considered a complex pullback. So right now, where do I have my money? It made this kind of first pass in this region. If you wanted to pretend that this little area right here was a 4 hour supply, it bounced right between that 4 hour supply. So I really like, this is very complex. It's got a lot of, consolidations in multiple spots where price decided to decide what it was going to do, or the gathering orders to decide whatever it wants to do. So for that reason, I'm going to go up one time frame, and I'm just going to look at the weekly and see what we get on the weekly. So from the weekly, what do we have? Well, we have higher low to higher high, which was back in last year in November of 2021, to a lower low created in February of this year, a lower high created in March. May, it created a new lower low. Same month created a lower high. and then now it's created a lower low in June. So right now we have more momentum to the downside. But one thing I want y'all to notice is look at how big these impulses are compared to now how big this last impulse was. The last drive down wasn't as strong as a move as it was the last two times down. So we could be coming closer to the end of these downward drives and actually see some bullish momentum coming in. Also, we've had a lot of volume that came in and drove it down, and now the volume is drying up, like I think Peachy just pointed out. So it's something to take a note, and you'll notice it because we're not going nowhere really. We're kind of ranging. So for those reasons, when I'm looking at what we're going to do from a market structure perspective on my higher time frame, it's telling me that that sales are more likely in, right? So we have pretty much a zone right here. This is a supply on the weekly that what I'm really looking for is looking for price to hopefully come in and tap this and then probably head down one more time. And, then from there, we just look to see what happened, because then it could possibly come and do something like this. And then for the next year, start heading up to go ahead and make new all-time highs. But we don't think that far. So right now, I still got a thing of seeing it in bullish momentum until otherwise, but I still think this low's weak from a weekly perspective. So from a 4-hour, it could end up going up all the way into this area in the zone from a 4-hour perspective. And I still think that it might do that, but it might pull back some from a 4-hour based upon what we could see, and maybe come back even into some weird zone down here and possibly go up. And then I'm expecting it to come back all the way down. So I still have kind of a bullish bias when it comes to NASDAQ, but time will tell. So I hope all the gang signs I throw on my charts help make sense. Purple is for the weekly and the orange is for the 4-hour, just for those that are just joining in or maybe confused. So that's kind of my outlook on what I see from a higher time frame perspective on NASDAQ. But we'll see how it plays out. It can change any day. As I always say, it only takes one candle for me to change my mind. So we will see what comes next. Next, what's the next pair? GU. So let's go and hop over to GU then. All right. So y'all know the drill. Where the magic happens, first thing we do is look at market structure. So, wow. Price went all the way from here to make a lower low to a higher high, lower low, lower high, lower low. Impulsive move up to make a higher high. And for me, it made a lower low. So at this point, that's kind of rangy like behavior. But what my outlook is really looking is that I see this as a supply zone on H4. There was a supply right here, and this supply is what eventually caused the break of the lower low. But price, why did that go? Oh, wrong colors. Price broke through the zone today. That was my first target of where I was looking for. I wanted to hit this. And I still think that price is going to have some bullish momentum and then go up here, probably tap this zone. And I'm still expecting it for it to come back down. From a weekly perspective, just go a little bit higher to see if I can support that. I mean, weekly, we'll give 1 second for it to pop up. Right now, from a weekly perspective, here is a demand zone that we have right here on the weekly. And if you look at market structure, all the way back in 2019, it made a lower low. It made a lower high here because it didn't pass through the body, but the wick was higher. And then COVID sent GU down to these levels right down here to 1114. Then from COVID all the way to 2021 in February, March, it made this higher high, and now price is coming right into the zone, right? So price is right here in this weekly zone. I've had this zone drawn since May or April and May, one of the two. So it looks like it's going deeper into the zone, and it could come all the way down for mitigation and then decide to go up. which would mean that the dollar gets weaker, GU gets stronger, and then we see price ended up taking out this high, which I think the high is weak. But also look at the volume. The volume has been significant to drop it down, and it's still significant volume, but now the volume is kind of letting up just a little bit. So it could, I still think that it's going to go a little bit further down, but from weekly perspective, I think we'll get some bullish momentum. But we first got to break this. I think we'll break this low, and then we'll see what happens here over the next couple of weeks to a month, and then maybe we get some bullish momentum, but we can be stuck in this weekly zone for quite a while. So that's kind of what I see in the short term, and then kind of looking at it from a long-term perspective to see what I see in the market. Nathan, do you want to share your charts and just share what you see on EU from your perspective?
Yeah, sure. Just using the iPad today, so we'll see how that goes.
Oh, you got the best tool in the house then.
Yeah, and I actually like it recently. I'm using it for everything, so it comes in super handy.
Let's see. We need Marco to get him an iPad so that way he doesn't miss any trades for potty breaks.
Yeah, for sure. Let's see if this works. Okay, let's see. Can you guys see my screen?
Yep.
Awesome. Okay, so EU, we are bearish as hell, like crazy bearish. We all know that. We've seen some crazy stuff today come down to €1 to $1. That's big news. Euro is getting super weak at the moment. And yeah, so we've been super bearish. This is the 4-hour chart here. Now, this is the first time where we've actually taken out a 4-hour supply, as you can see over here. And I'm starting to think that we may see a pullback. We may see a pullback because we have tapped into a daily demand from ages ago, from all the way over here to the left.
Golly, you're going back many years.
I hope my internet doesn't freeze trying to get all this info. Come on. Where are we? Let's go. God, is it that far
Still
back?
15 years left, man.
Yeah. Well, we tapped into a daily demand. I just want to justify the demand because that's one of the most important things. God, this is very far back, eh?
We're almost back 20 years now.
Yeah, it is 2002.
Wow. That's 2003.
Yeah, come on. Crazy, isn't it?
Wow.
Yeah, so we've literally just tapped into this little doji here. We can justify it by saying that, we had a bit of demand in this wick here. We got a reaction and failed to take any liquidity, but this was used as supply over here because we got another reaction here, which took it out. So we've tapped into that doji. It didn't sweep any liquidity, so I don't think it's too significant. Now, this demand zone underneath here is a daily and it's also a weekly demand. So my thoughts is that we may come down to that before we see any sort of pullback. But on the 4-hour, we have seen the first break of supply. And that's the first one ever since we got all this bearish momentum to the downside. So there's a chance we might see something, but I don't think it's going to be too significant, to be honest. Trying to count the pullbacks now, especially with the daily showing bearish intention as of now, I don't think we're going to see anything too soon. I think we may come down to this weekly demand, and then we may see something. This demand is more significant than the demand that we've already tapped into now with this, because it has swept liquidity, and that's where it's more of the extreme of the move too. So we may be seeing that. So yeah, we took out this 4-hour supply. Look, we got a small reaction, nothing too big. We took out this low, but still there was nothing significant to this move in general. To me, this was more of a liquidity sweep. We do have a 4-hour demand now created. So if there's some sort of 15M change character here and we can get some sort of, more bullish kind of confirmation, then I'd be looking for longs, and then we can start looking into the daily supplies, which are going to be these ranges here, and we can, somewhat, expect a pullback. But for now, I'd be super careful trying to long anything. If anything, it's going to be short-term longs, maybe something intraday. But the way this is looking at the moment, we got to see some more bullish intention, especially on the 15M. Like we have come up here on the 15M. Let's see. So on the 15M down here, this was even a kind of a weak sweep. Like we had this sweep down here. We took out the first supply zone here. So this was the first indication that, you know what, we could start to see a bit of internal liquidity being taken after taking the external down here. So we did take out this supply zone. We took out that first 4-hour supply zone I was talking about. Now we've tapped into this, and this gave us the reaction, and we broke that. But what has happened now is that we've taken liquidity from the top and we've kind of turned the other way. So now demand is starting to fail again. Demand is failing again compared to supply. So I'm starting to think, right, we're going to come into this 4-hour demand zone that's down here. Sorry for all the drawings. If we don't get some sort of 15M change of character in this area, then I would be very, very, very hesitant on wanting to go long from here, because we still have a big way down, and just the way even the 4-hour change character, it didn't really change character with too much momentum. So I just be careful of long term, looking to go long term. That's all. We are due a pullback, but we don't know when that pullback's going to come, and I personally just don't think it's yet. And if anything, I think this weekly demand holds a little bit more out of all the demands we have tapped. Holds a little bit more weight compared to where we've tapped in right now in that little doji. Only time will tell, but yeah, that's really my opinion on it. We have a bunch of liquidity to take here. We can see that we have all this internal liquidity here to take, so we can fill this massive void. Look at all that. It's going to be a nice pullback when it does come. That's just all resting there. But between now and then, we will have to see a little bit more bullish intention into the 4-hour, and then start looking for the long-term kind of longs that direction.
If the price holds, I'm going on a plane, and I'm going on a shopping spree.
You got a crazy long today. You got right in at the bottom somewhere down here, wasn't it?
It was. I don't think it was all the way down there. I think it was like somewhere in that area. Yeah, you're right. It was. I didn't. Wow, that's crazy.
Can't use this iPad. What's going on here? There we go. Yeah, he got in somewhere nice down there. God, that was a lovely trade. Lovely.
Wow, you're right. It actually was.
I think it was that.
I didn't realize how far down it was.
Yeah, I'm thinking it was actually here. You seen this change character, and then I think you got something somewhere inside there. Oh, what a nice trade. Sick one.
It was a great way to start the morning. Oh, man, you know it was crazy. If you had gone back 6 more months on TradingView wouldn't have had no more information. That's how low price is.
That's crazy.
That's crazy.
Man, Europe's so cheap for you. It's so expensive for us over here.
Yeah, well, it's I don't know. Living's expensive at this point.
Yeah.
No matter where you're at. I hope to answer the question for you, Peachy. Let us know in the chat if that helps.
Definitely.
Awesome. All right. Let's see who's next. We got question from Milton. Milton asks, can you talk a little bit about 5 candles pivot? Okay, sure. Let me go back and share my screen. Let me know if y'all can see it. Can y'all see it?
Yeah, we can see it, man.
All right, cool. So how does 5 candle pivot work? Well, pretty much, if let's say, for instance, you have multiple candles, so I can move these things around. There we go. All right. So this would be an example of a 3 candle pivot. And essentially what happens is you have one candle, you have your middle candle, which is the highest point, and then you have the third candle on the other side, which is lower than the highest point. For a 5 candle pivot, you just add in 2 more candles. So you want 2 more candles on either side, right? So if I drew a line really quick, what you're looking for is the wicks to be, you want this middle wick to be the highest wick. You don't want any of the wicks to be higher than that. So for instance, if I had if I had, for instance, one of these wicks become higher, then it doesn't, for instance, validate, because then this would be the highest point, not this point right here in the middle. So what you're looking for is really just in the middle, this middle candle, including the wick. The wick is the highest point, 2 candles to the left and then 2 candles to the right. And then if you are looking for it on the opposite way, like you would look for this to be the lowest point if you were to do the opposite. So I'm gonna drag them down here really quick. So same concept, but just flip the direction. So for a low, you just want this, you want the middle candle with the wick to be the lowest point. So I'll give you an example. All right, price comes right here. So here's the top of that candle wick, the top of this 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 candle wick. So if you notice, we had 2 candles to the left that was lower than this candle right here, 2 candles to the right that was lower than this middle candle. Therefore, this becomes a high. Now we're going to flip that and just do lows now. So price ends up coming down, making this leg. So what do we have? 1 candle wick, another candle wick, another candle wick, another candle wick, another candle wick. So now we got 2 candles to the left that are higher than this middle candle right here, and 2 candles to the right that are higher than this middle candle right here. Therefore, that ends up making your low point. Does that make sense, Milton?
Yes, coach. Yes.
Okay, cool. Yeah, that's pretty much it in theory. That's how 5 candles you can. I found 5 candles worked a little bit stronger than 3 candles. 3 candles would move a lot, but you can try it out and test it out. A lot of people have found that it works better, works great on indices and gold because you don't have pullback values. For your currency pairs, you might want to use, for instance, the pullback method that's explained within the course. But try and see what works best for you. I use 5 candle pivots for everything, so I don't limit it just to indices and gold. But anything that you use, just make sure you use back testing to be able to get really comfortable with it so that you understand it. All right. The next question that we have is from, one second while I'm trying to get my bearings right, y'all. Ooh. Next question we have from, I cannot pronounce your name, so I'm not going to even butcher it, my friend. But you have a picture of something that you want us to take a look at. Give me 1 second while I find my window of where Safari went. Oh, here it is. Okay. So you asked us to take a look at this. Take a look at this picture. What question do you have specifically that you want us to look at? Feel free to let us know in the chat, or you can come off of mute as well too.
Yeah, so I have marked up order blocks and imbalance. A good demand or order block, or a demand or supply could be a demand or a order block with an imbalance. Would be a good potentially area of interest, you think?
Well, first, what does your 4 hour tell you from a market structure perspective?
Yeah, it's going down. So like now it's making a higher, a lower high before it's now moving down. So the market is bearish on the daily and the 4 hour.
Market is bearish, but price hasn't even pulled back. If you look at it from a 4 hour perspective,
Right.
it's still market is bearish, but it hasn't made enough of a pullback, and it hasn't pulled back into any significant supply zone. as well from a 4-hour perspective. So for the short term, sales aren't high probability until it pulls into a zone where it could potentially make a lower high. Does that make sense?
Yeah.
No.
Yeah, thanks.
No problem. We don't really use much imbalance for concepts for imbalance that you'll find if you go through the course. Imbalance helps us know that there's institutional movement because the only people who can make candles like that are institutions. But we also got to combine that with market structure to make sure that we pull into the right spots. So let me show you what I mean by this, for example. Let me switch my chart. Okay, can y'all see my chart? Does it say audio USD?
Yeah.
Okay, so you're taking sales right here, but from a 4-hour perspective, price made a lower high here. Here was the last significant drop. Yes, this is all an imbalance, but I mean, if you follow imbalance theory, it could be filled. And if that imbalance is going to be filled, the significant supply that it'll probably touch likely is going to be somewhere in this region at the first point, because price wants to make a pullback. Now, if you take into account premium and discount, price hasn't even pulled back across equilibrium, which is 50%, which is the yellow line that I have drawn here. So right now, sales aren't even high probability. Buying is high probability until we cross over that equilibrium. Between 60 and 40, that's where it tends to be iffy when it goes both ways. But it's still, when you get above 50, that's when we get into our premium from a premium and discount perspective. And that's where sales get to be more probability. So therefore, when you think about it from a 15 minute, we still probably have bullish momentum. And if you look, we have demand being respected. We haven't even broken our first demand.
Yeah.
So you're seeing a demand chain form as in comparison to not seeing a supply chain form. Does that make sense?
Yeah, but like if you can go back on the 4-hour, those two between there, the two
buy to sell wick?
Huh?
Are you talking about the buy to sell wicks?
Is that what it is?
This?
Yeah, so between the lower and the high there, those two areas there, the high, low, and the high, that's not considered structure, or
Are you talking about this?
Yeah, or yeah, those area, yeah, that area.
Well, we didn't close below this low, so it wouldn't have been a break of structure. No,
that's all substructure.
Yeah.
Okay.
Yeah. If it closed with a body, then it'd be different, but it didn't. We're just between this swing high, this swing low.
Yeah.
You know, you have a supply zone here, like we had a reaction to demand inside here, came down, came up, pushed through. So you may have some sort of supply zone in here you can mark up to, or you can refine it down a little bit if you want to. But like Brian was saying, we haven't really pulled back yet. And we need to justify a pullback by, coming into at least 50% of the zone.
Yeah, so like, how do you recognize that that there is, if you take the 50% from the lower high to one of those two areas, that might be in the area where we are now. So why do you not consider that?
Between where? You can annotate on the screen if you click annotate, man. You can draw.
Yeah. Where?
At the very,
sorry, you're probably meaning this and this, yeah?
Yeah. Like if you take the Fibonacci from there, then right now we might be in the 50% area.
Yeah, but that's substructure. That's not your swing structure.
Yeah, that's why.
But
so
but how do you know that? Because it's not.
It has to be swing structure, straight up. It has to be swing structure. We can't use substructure for premium discount. It has to be between swing structure, between the high and the low. If we were to count substructure, then we may as well count minor structure and all sorts of different legs. We stick with the swing structure.
Mhm.
premium discount.
Yeah,
Like, don't
but
get me
like,
wrong, price could just totally reverse from here. It could do that. But at the moment, we're bullish. We're expecting a pullback. So your expectation is for it to at least get to 50%, unless we start to see 15M demands fail. If they start to fail, then you can presume, you know what, we're going to put in a new lower low. But for now, you're bullish until the demand fails or until the supply fails. Can you trade the other way? Well, like, to be safe to trade the other way. Do you know what I mean?
yeah, but I'm not exactly sure how. So like it has to make. So I'm a little unclear about that area I mentioned. Like, how do you know that that's substructure?
Because we didn't close below this low here. We just wicked it. If we had it closed below it, we can count that as a break of structure. That would be then swing structure.
Okay.
So
if you go back and in the course and look at the section in regarding market structure, you're going to have your swing lows and swing highs, and you'll have your internal structure. And the requirement is that when we see what can make swing structures, price could do. Let me show you real quick using this. Price goes up, makes a high. It comes back and makes a low here and breaks this high. Price can do whatever it wants to in between all of this. But until it breaks either this high or breaks this low, that's all substructure, because this is the swing point that has to be broken for a new significant high or low to be created. So when after that happens, price could do this. It still hasn't broken either one of the highs. And then at the moment that it finally breaks over this last significant high, that's when we declare, okay, this is a new high right here.
Yeah, but it closed underneath it with a wick. That doesn't count.
No, because it has to be body. It has to be body breaks, not wick breaks. So
yeah, so it has to move body downwards below it.
So here's the high.
That makes sense.
And see, here was the last low. As soon as this body was broken, then we can start considering where the next low was. So then this was the last low. Price makes a pullback to the high. It comes back, and then price ends up coming down and doing this. It still hasn't broken with a body until it crossed over to this point right here. And then this makes that the most significant low. Now, if you look at the previous previous high right here, price came down, reacted across some demand. It came back up, and then it broke through demand. This was a possible supply spot where we could have considered price to go back to and react. Price did react. It came back down. It came back again. This ended up becoming a new supply. Price ends up coming down. You see how it made a significant pullback from swing structure, and then look at where it came to from a price and delivery standpoint. It was above the 50%, which is this gold line, and this is where price reacted, and ultimately ended up ended up coming down to eventually have a reaction. You see that?
Yeah, that makes sense. Okay, thanks.
No problem. So you might want to brush up on that. Market structure can be a little tricky, guys, but really the basis of what we can base our strategy on for the market is really a combination between market structure, supply and demand, liquidity concepts. And when you combine all of those together, along with other things like premium and discount theory, it really helps you to be able to find the highest probability trades. Anything can happen in the market. We can't rule out anything, but we want to trade where it's the highest probability. So it could go, like Nathan mentioned, it could go right from here and go straight down. But we have a higher probability of price coming up to here to making our new lower high spot and then coming down and taking out this week low. I hope that makes sense.
Yeah, makes more sense. I think I have to go check out those videos again.
Awesome.
To get a better view.
Awesome. All right, guys, we're going to save time for one more question. And the question is, I was wondering for a pullback, I use 50% of swing structure and it should align with order block on 2 hour, 4 hour and wait for a good reaction on the 10 to 15 minutes. What do you think about this? Maybe you have something to add. Also, order blocks to me are ones that broke structure or ran liquidity. I mean, it's what everything that we do, guys, it's all about backtesting and finding what works best for you, right? So the moment that we go from like a swing structure, as Peach is asking, we go from this lower high to this lower low. If we're looking for sales, for instance, and then let me see if I have my other version of PD. No, I got rid of it. Darn. Draw it a certain way. Hold on a second, guys. Oh, okay, cool. But not the way I wanted to do it. There we go. This is another way that you can really kind of consider the fibs. Consider this. All right. So this is going to look very colorful, but mind me for 1 second. So we got the lower high here. We got the lower low here, right? Anywhere that's red is not high probability for sales right now. Anything that's in green is pretty much high probability for sales. And then you have the yellow area, which is where it starts getting into the equilibrium. And I definitely did these pieces wrong. There we go. All right, cool. So I'm gonna do. So pretty much anywhere in this like 50% range, I mean, it might be ideal to start looking. And then like Nathan mentioned, we have body cell wicks right here. So this potentially could be an area. This potentially could be an area. And then we also have our extreme, which is all the way up here. This is the area. But pretty much your highest probability is going to be somewhere in there. Now, does price sometimes react here around this 40% range and drop on down? Yeah, it definitely does. There's no kind of magical rule that price has to follow. Price can do anything that you want, but the goal is for you to just focus on where can we find it to be the most high probability. So if you've tested and you found that, for instance, if you found body cell wicks right here in the 50% range, 9 times out of 10, you would have found success, then by all means, go do it. There's nothing wrong with that as a philosophy. Does that make sense? Whereas I tend to probably wait somewhere around the 60% region or higher, just because I take a lot of losses, probably 3 out of 5 or 4 out of 5 times. If I get a trade in here, I'm taking a loss. And I just know that because I've back tested. And then from there, you know, I know that high probability is anywhere in the 60 or above. But don't rule out something if you have statistical data that tells you this is a high probability for you. Because at the end of the day, we all see the market a little bit different. Nobody sees it. No two people see the exact same. But our goal is to just find what's high probability for us and what we're willing to take a risk on to find out if the probabilities were in our favor. Does that make sense?
Oh, yeah.
Yeah, I got bit way too many times in this area. So I just stopped I mentally don't even pull zones anymore. It's subconscious, it's subconsciously like I won't even pull a zone there.
Yeah, I think what I'm backtesting currently, this zone has a really good percentage of holding, like in comparison to this one.
Mm-hmm.
For me also, because I'm looking at fib levels that I have tested, and I think here is like 7, 8 out of 10 times that it reacts, and here, like you said, like 4 to 5, I guess. So yeah.
Sell to buy wicks are absolutely terrible. I'll tell you that, right? So sell to buy wicks are terrible. And for me, I'll only trade off a zone that swept liquidity. This hasn't swept anything. It had a reaction. We came up, pushed down. There was no sweep here. Up here, we have this nice wick that takes out this high. This is a nice sweep. Now, it has been mitigated, but it doesn't matter in my eyes if it has been mitigated already, even though this has touched that. This is still a valid zone. That's where the sweep came from. But one of the biggest things is that you'll find is that those sell to buy wicks, because they didn't sweep liquidity, they will become liquidity. So if liquidity is not created below, before the tap, then this will become liquidity. And that's what most likely happens with them sell to buy wicks, especially on the 1M for entries. They're like absolutely useless, like at least 80% of the time.
Yeah, I was just wondering, maybe this could be like a flip zone, since this, as you can see, this broke this structure and ran with this whole candle, all these lows. So I was thinking it did something in a way, and it can have some reaction at least.
Yeah, no, for sure, it could have a reaction and come up, but anything can happen, right? But what I'm saying is you're right up here when it comes to the extreme. This is like the best zone that has taken liquidity. So they tend to get
makes sense.
delta buy wicks. They definitely tend to get run a lot.
All right, thanks, guys.
Yes, so buy to sell wicks, they might give a reaction, or what did you say about that?
Oh yeah, for sure they could give like if price comes towards it, it could give a reaction. Is that what you're saying?
Yeah, or like in general, what should you consider when it comes to buy to sell wicks? What functions do they have?
Well, it is a supply zone, but buy to sell wicks, if through data collection, we found that buy to sell wicks aren't as strong as other supply zones compared to the ones that sweep liquidity. They might have broken structure to the downside. They might have reacted and be a flip zone, but because they haven't taken liquidity, they tend to be run. This will actually be run for a zone above.
Yeah,
okay.
we found that happens 4 out of 5 times that they'll just be run. If you
but
want
at the same time, sorry, Brian, sorry.
Oh, go ahead.
Oh no, all I was going to say was this is because we are on the 4 hour, we can always look for confirmation on the 15. We don't need to short off this with a 1M zone. If the 15M came into this and we got a change of character, we've seen that demand has failed, we can start to short, so I don't want to rule them out altogether. That's all.
And then you could even, if you want to go look, I might go down to a lower time frame, like maybe 2 hour, and see if I can find a candle here that supports, for instance, this being like find a bullish candle in the midst of all these bearish candles, and then use that as 2 hour zone. So that may help you to find a little bit more success with buy to sell wicks if you can find a candle on a lower time frame. So that's something else to consider that can help strengthen the success rate from buy sell wicks. Like, guys, all the concepts that you see online, you don't need to use every single concept. You need to use the right combination of concepts that give you the highest probability of success in your trading. Like, for instance, I don't use liquidity. Liquidity is not even a factor in any part of my trading. But liquidity, for instance, is a factor in other people's trading within the community. But we both equally end up finding some of the same setups in some of the same trades, and ultimately end up finding success in trading. And what we can say is we all agree to some degree on the validity of a lot of concepts, but you got to find the combination of stuff that works that you can repeat, because part of the job is really being able to create an analysis, but not be so much on a forecast. And the reason why I say this, because you don't need to predict everything that price needs to do. You just need to have some areas where when price comes to the areas, you give it further introspection to see, does it give me a reaction that I'm looking for? And if it has that reaction, I'm willing to risk 1% of my account to find out if I can gain 5%, because it'll continue in that direction. Like, everything we do in trading is not about predicting. It's just about reacting. So anything can happen. And the goal is not to be exactly right or wrong. It's to say, all right, well, I know price, from what I can tell, I know market structure, which we all generally agree market structure is king in the market and price action is king. So I know from a market structure standpoint, more than likely price is going to go down. Now, I don't know from where, but I know that when I know market structure, it goes from making a lower high to a lower low. And if it continues somewhere in these regions, it will stop and then will come down and make a new low. So with that, we know for high probabilities, we're going to buy until we get to some specific supply where price is going to have a reaction. It's going to stop, and then it'll probably continue in its bearish momentum. But it's all reaction. So we can identify 3 different spots that we're willing to look to see what happens. If it doesn't happen at spot 1, okay, cool. You know what? We didn't get a reaction here. Price blows through it. All right, I'm going to look at the next supply zone. All right, we didn't get a reaction here. We get down, we go up to the next supply zone. Oh, we get a reaction here and price starts dropping down. Oh, great. Now it might continue in that direction. So there's some common ones that we'll definitely use, like market structure, liquidity, and supply and demand, because when you combine those together, they can give a really strong, successful rate. I think about it like liquidity, market structure, and supply and demand as being wheels on a car. And you need 4 wheels for a car to drive. If you had 3 wheels, your car's not going anywhere. So you want to balance and not put too much weight in just one attribute of your system, but being able to combine them so that they all work together. So they can say, oh, market structure says we're bearish. Oh, I'm going to use supply zones. Oh, this is swept liquidity or it hasn't swept liquidity. Now I know, okay, I need to wait for this zone. It's more high probability. This is the one that I'm willing to wait for, or this one up here. I hope that makes sense.
Yeah.
So if the holy grail in trading exists, nobody would know, because they'd be making so much money that they wouldn't share it. So your holy grail in trading is just what you've really back tested and you found the most success. So like, for instance, when I say, oh, this hasn't worked for me, because I know 4 out of 5 times out of 200 trades, every time I took this, it didn't work. That's a result for me, but that's my truth. It could be that you do back testing and you find 5 times out of 10, it actually works for you. So part of it is you want to test and collect the data. The other part is you just want to be comfortable in doing something that works naturally for you. So and with that, I am finished with my TED Talk.
It was spot on, Brian. Spot on. We just love your voice, bro. Simple as that. It's such a soothing voice.
Look, I'm trying to compete with Morgan Freeman for the voice of God.
Well, you're definitely running. You're up there, bro. You're up there.
All right, guys. Thank y'all so much for tuning in. Sorry for keep y'all a little bit longer, but I hope you got a lot of value out of this. If you have questions that you didn't get a chance to get answered, don't forget and don't hesitate to go in Discord and ask in the questions chat. Between the coaches and our student leads, we all try to be there somewhere around the hours to be able to answer your questions as fast as we possibly can and be able to provide you any value. Now, don't forget, guys, on Thursdays, we have our power hour with Rob. It'll be at the same time, 12 p.m. Pacific Standard Time on Thursday from 12 to 1. And then on Sunday, we have our backtesting session. If you haven't signed up for backtesting yet, I'm going to let Solomon say his 2 cents, but I think it's highly, highly, highly helpful for you. I think Solomon learned a lot. He did a great job on our last backtesting session. And if you haven't done it, you really need to sign up, because just doing it one time, you will learn so much. Am I right, Solomon? Let me know.
Yeah, for sure. It was very helpful.
You will gain it away. I think everybody should do 2 of them, honestly. So if no one signs up, I'm going to start picking people, because you may feel afraid that you may do things wrong, but it's a safe space for you to be in, for you to be able to practice. And you even get real-time feedback from coaches like Rob, Nathan, myself, or student leads, so that we can be able to help you become a better trader. We don't want you to have to go to another community. We don't want you to have to go read somebody else's book. We want this to be the last frontier for Forex for you, meaning that you gain the skills that you need from here. You become a profitable trader, and you end up, helping creating generational wealth. You end up helping your family, your community, whatever it is that you desire. So we're here to help you. As long as you put in the work, we're going to be with you every step of the way, giving you data, information, everything that we learn that's going to help you to be able to mimic our trades and do better. And guys, also, if there's something that you are unafraid about, something that you have questions about, do not forget we do one-on-one coaching. You can sign up with Rob, Nathan, or myself to be able to get a 1 hour dedicated, or we can answer any questions in a one-on-one setting. It's been really impactful for the people that have been able to sign up. If you go through our testimonials, you can see so many different testimonials from people who sign up from coaching, from Rob, Nathan, or myself, and how they've gained benefit and become better traders. And in fact, part of our student leads, the time that we spent with them hands-on helped them to be able to become student leads and find success in trading. So we want to help create more success stories. We're here to help you. We just need you to tell us what you need help with, and we'll be glad to help you out with, guys. So with that, we'll let y'all go and wish y'all a great rest of a trading week. Let's hope that euro goes underneath $1. Euro
No.
USD.
No.
So that I can get my shopping spree on.
Oh,
And then hopefully that NASDAQ decides to do something other than stay in the area. If it's going to drop, let it drop. If it's going to rise, let it rise. But hopefully inflation isn't too high tomorrow. So
I tell you, I'm very happy to get paid in dollars. Very, very happy this time.
right? I'm like, look, I'm looking at flight prices. All right, it comes down every day that the euro dollar drops. Every day my itch burns.
It's crazy. It's crazy. We might 0.95. Maybe we will.
Maybe we will. If we get to 0.95, it's on, y'all. Italy shopping spree on me.
Real estate everywhere, man.
All right, guys. Y'all take care. I'll see y'all in Discord.
It is.
See you guys.